today we're gonna talk about a strategy that is really amazing and gonna help you make money in the stock market. We're gonna talk about the indicator Donchian channel. I'm sorry if I pronounce wrong. I think it's Donchian channel. And this indicator is basically a channel that will have a top line and a bottom line. And this bottom line and top line will be related with the highs and lows of the market. The bottom of the channel and the top of the channel will move up and down depending on the high and the low of the last X amount of candles. Usually X is the 20 period, so it means that the high gonna be the highest high of the last 20, and the bottom gonna be the lowest low of the 20. Why this is cool? Because we're gonna be able to catch manipulations of the market or catch breakouts depending on what kind of strategy you are using. So strategy to go on along, the price should be above the 200 moving average, and the price should break the bottom of the bottom channel, the bottom line of the channel. Let's say I'm gonna show you examples here, but if this is the moving average, the price come and break the bottom channel, then you go on along and you're gonna ride the price until here. To the shorts is exactly the opposite. The price should be below the 200 MA and should break the top. So now the stop loss. The stop loss will be the low of the candle. So to calculate the stop loss, you're gonna, let's say you have here a candle. This is the bottom of the channel, and the next day you buy, and let's say the price is here the next day. Okay, and the moving average is below, so you're gonna go for a long. Where is gonna be your stop loss? Your stop loss gonna be here. If you're gonna go for short, it's gonna be the opposite. Let's say the price close, break the channel on the top. The next day you short on the next candle, and where is gonna be your stop loss? Your stop loss gonna be here. So the target, if you go along, you're gonna be the top channel, and if you go on short, the target's gonna be the bottom channel. As you can imagine, it's really hard to filter breakouts in thousands of stock that exist. So we're gonna use the Kyrie Bull, and with the help of Kyrie Bull, we can filter really fast. What you're gonna do here is go for peaks, Donchian channel, and first we're gonna do for breakout of the bottom, and we have here the breakouts. So any of these breakouts, I'm gonna check and see if this is above or below the moving average. Also, I'm gonna teach you a way that you can filter these breakouts with the moving average really fast. But first we're gonna use this tool here. So it's the 20 period breakout bottom. And what we're gonna do here is I'm gonna open this one for example, Activision. And what I'm gonna do is I'm gonna put here Donchian channel top, Donchian channel bottom, and the 200 moving average, simple moving average, you see. Okay. And the price is clearly above, so we'll not go for a short. But as you can see here, for example, in this case, we will not go for a long here because the price is below. If you don't know which line is the moving average, you can go here, simple moving average, and you can see. For example, here we would go for a long. Why? Because the price is above the moving average and it breaks the bottom channel, so the next day we would buy here at 93, and the stop loss would be at 87, and we would wait and exit here at 96. So $3 is roughly 2%, I think. So here would be the same, another entry, and this one we're gonna talk about when the price move a lot on the direction you want. You can move the stop loss to break even, so you don't have any risk anymore. But we're gonna talk about that. So we're gonna have here another example. So here we have the price is above the moving average, correct? So this is a long. Today I would buy this and I would try to ride it until the top of the channel. Another examples, as you can see here, for example, it breaks down, close below the bottom channel. And what would you do? You would go for a long here on the next candle, the next day. And your stop loss would be below this red candle. And your target would be the top of the channel. So here, as you can see, 64 to 68. It's $4. $4 is really good. It's almost 8% or 7%. And as you can see here, for example, this would be a loss. But as you can see, it's really interesting. When you see a loss, your stop loss is gonna be like here. For example, breakout above the moving average, it's a long. So you enter the next day, you buy at 65.94, and you end up getting stopped out at 65.46. So it's not much, it's like 20 cents per share. And here we make $4 per share. So multiply this by 10 or by 100, and you can see that the risk to reward is really good. Other trick you can do to filter even better is you can come here to filters, and you can say that if the close price is below the bottom channel, okay, and if what we want the close price to be above the moving average, 200 moving average, okay. And now this is exponential, we want the simple moving average. Okay, so this is the stocks we have. So as you can see, guys, you have tons of opportunities every single day, and you can filter automatically with Caribou, so you're gonna save a lot of time. Just make sure you make a correct risk management, and so you don't risk everything on a trade, and put your stop loss always, and open your position at market open. So guys, I hope you like the video. See you on the next one.